And good afternoon, everybody. This is Michael Filighera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, July 13th, 2021. It was a quite interesting day, and more so in the NASDAQ than in the S&P, but the S&P did some fine moves today. And so let's just dive right in. Where I left off last night, I had been counting. I actually added this morning, but I had been counting and been looking for a 4 and a 5. And I figured that this completed wave 3, and I was looking for wave 4 to finish. And it did in grand style. And then the market did proceed to go up in wave 5. I'm not putting that labeling on yet because we now run the possibility that this actually completed 3 and this would be a 4. And if that's the case, 4 has some additional momentum it could gain to the downside and still then go up and get itself into this zone. Otherwise, I will not. So I'm waiting for more information on the market. Let's stop and say that. So otherwise, I would have to count it as 1, 2, 3, 4, 5. The intensity of the decline against the intensity of the rally off of the low from this morning was equal. So it shot up and then it shot back down. Took several hours, but it still came back down. And so a drop below 43.55.50, so like 55, should give a lot more support to this being the completion point. Now, if again, it's the completion point of that subminute wave 5, which began here, then we have to take into consideration that not only is it completing subminute wave 5, but then it's completing minute wave 5, then it's completing minor wave 5, which is completing intermediate wave 5, which is completing a primary third wave. And that would give us a much higher high in terms of how long it's going to take to get back there, if indeed this is the mark. And what I would now look for, if it is on the hourly chart, not the 30, I'd have to go up to the hourly, and I need to now count 5 waves down off of that high. And right now, obviously, there's just 1 and maybe the itty bitty beginning of wave 2, or some variation thereof. But on the hourly, at best, I can count maybe 1 down, and now we're going to get a rally back up to these levels, and then an additional leg down. We're not off to any great shakes as we start glowbacks, but it does not surprise me at all, because now definitively more information is now needed for traders to make decisions as to what they're going to do in individual stocks that may be reporting from now and next week or really getting up on us, or just basically the weight of the market will begin to pull it lower. The CPI number did. So we do have additional industrial numbers coming out, and that may show that inflation still is very real and gaining traction versus leveling out. If it's gaining traction, that's not good for, well, number one, it's not good for us as consumers, and that was evidenced as this morning when we got those consumer price index numbers. That was kind of showing that inflation is very real, and that affects all of us. And so you're going to see people start to take their money off the table. So inflation is not necessarily a good thing. And that's why we got that reaction. But the reaction after to buy it back up and to take it to new all-time highs, while expected, was pretty interesting to watch, because I had thought the market, the last thing I'd said is that the market would drop quickly in a 4th wave and then rally with the same intensity in a 5th to new highs. And that's exactly what it did. But it still was surprising beyond me thinking that I realized that coming into it, there were likely a lot of buy orders being put in and timed, timed release, so to speak, for today. The CPI numbers came out an hour before the opening. So I imagine there were some cancellations, but too late, I don't know. So this wasn't quite surprising, the intensity. As I was like, are you kidding me? And I don't know if it was just the void of sellers who were just like, we already got out, now you're buying it back. I don't know. But this move was pretty intense, and it kind of hung out up there for about an hour, and then it sold off. So the level was rejected, but it took a good hour to really kind of consider it and look at it and trade around in it, and which gave every indication, since it was consolidating at the higher third of the whole move, or even shrink it more, the higher quarter of the whole move, it really gave the inclination that it was going to continue higher. And our next resistance was up here at 43.88. And I really suspected that that's where it's going to go. But big no. So what I now need to see is 5 waves down to give confirmation if that's the high. And again, if that's the high, then we're staring down the barrel at the beginning wave of a primary 4th wave correction, which will have 3 waves, an ABC of intermediate degree to complete it. So we would just be in that beginning wave of wave A, primary form, and also the A wave of intermediate wave A. So 2 different forms it can take. For the size of this particular one, I'd be looking for that 5 waves down on the hourly to announce wave 1 or wave A. Because again, if it's the primary degree correction that's beginning, then we stand a very high probability of coming back into this territory. It goes down to just a regular monthly. I think that should still be there. Yeah. This is where I expect the primary 4th wave to enter and to complete within the price territory of the 4th wave of 1 lesser degree, and that's the intermediate 4th wave. So that's where I'm looking, and it's a primary degree correction, and that would bring us from basically 4,300, and we got up to 81 today, down to as low as 2,174. That's quite a drop from here. But that's the good news is that there'll be lots of trading, and it should be very exciting, and we'll have great moments of good trading. But what comes after is a primary degree wave 5, which will consist of 5 waves of intermediate degree and an advance. And that would again be expected to go to new all-time highs. And this, of course, you're looking at the sky. So if I'm believing that this needs to unfold, and trust me, I think it could happen real quick. It's a 4th wave, quick zigzag, boom, boom. Although this 4 was a zigzag, this was a zigzag. So a lot of the corrections, and they usually will alternate, they'll be alternate. So, it could be a flat, which would just be more, it just takes up more time than price, or it could be a zigzag, which could be very damaging. It could be, it's a sudden, it's a jolt, it's a sock in the face to the market, and it will just drop, bing, bing, bing. And so that's what I need to, not that I need to see all of that, but I need to bring it down and on an hourly basis, count that first 5 wave decline. And again, initially, I'm looking, it should come down into here. It should definitely take back all of that last wave up. For sure, come down into here. And then some, get down into there. So again, we can stair step it down as we stair stepped it up. And now we're just going to be putting Fibonacci relationships into play to go 4th wave to 4th wave, or to section to section. So we'll be able to do that. And we're going to be using the 4th waves and all those degrees up as our levels. That's where I would expect however high we want to go, like I just did, basically by saying that what initially I'm looking for is that decline back to the price area of the March 2020 decline, of that intermediate fourth wave, but it's a primary. So if I pull it out to the primary level, I'm going to have to go all the way out here, then it brings all of this into play, which sits inside of there, which works. But we'll begin to just start to look at fourth waves as we went out. We have this, we have this, we have, that was a second. We'll have the 4 up here. So there's quite a bit. And that'll be our marching orders as we go down. I'll continue to use them. So like we have this 4, we have this 4, then we have this 4, then we have this 4. So we can continue to use them, and then we got another one all the way down. We will continue to use them. These are where we'll be looking for support. I've been looking for relationships between these and those. Okay, back to tomorrow. Tomorrow, I am going to continue to look where we do have the possibility, of course, to rally. If the market is going to intend that this completed 3 and this is a little 4 and we're blasting out in this manner, it has to do it in this manner, and it cannot go below 43.55 right now. If it's intending to just kind of blast, and this was just a little correction, boom, and that's done, and we're going to the moon. As if this is 1 of 5, 1 of the 5. And now this is 2 of 5, and now we got a 3 of 5. It should blast and go right past that without a problem. Can it happen? Of course, we did it today. Why not? Why couldn't it tomorrow? They stack up the buy orders. I don't know. Then if it starts to break down, then I'm looking for it to initially come down into here. And then we have down into here, but ultimately down into here. We're looking for this 4. Not the 2, the 4. So I have here, here, and here. Below 42.79, that's the high. And then we just start working it towards the other 4ths going on the way down. And that's what we're going to leave it for right now. We continue to trade what's in front of us, continue to trade using your moving averages, and please do not fight the trend that the moving averages are showing is taking place and is in place. If all the moving averages are in alignment on your 1, your 2, and a 5, and then pulling it out to the 15, the 30, and the hour, and they're all pointing in the same direction, don't fight it. Go with it. You'll be smiling all the way. Allow the moving average to tell you when that trend is going to change. If it does, and they all revert and they go and they're pointing higher on your 1, your 2, and your 5, that's a good place to start. That'll let you get into that rally and ride it with the moving averages. All right, next update, Wednesday the 14th.